I'll welcome all our viewers. We've got none other than Alex Tapscott coming to us live from Toronto. I'm in Newmarket. My name is James, and I'm with the Canadian Securities Exchange. And this is Instagram Live. So we've taken our hashtag finance podcast and we've brought it into the world of Instagram Live. And I guess 3, 4, sometimes 5 times a week, we bring guests onto the show and make sure everyone's staying up to date on everything that's happening in the, what do we call the new normal? It's new. Everything's new. So for those who don't know, Alex is a noted author. He's the founder of the Blockchain Research Institute and is really sort of one of the founding, I guess I can call you father in many respects now, of the blockchain industry in Canada. So maybe Alex, you want to give us a little more sizzle on what you've been up to and who you are?
Well, sure. I mean, you mentioned a couple of things. So I started this journey when I was actually working on Bay Street in the financial services industry. And that's when I first learned about Bitcoin. Before the word, blockchain became popularized, it was really this one single use case. And at first I was curious about it, but the more I looked into it, basically the more convinced I became that Bitcoin was something quite important and that the underlying technology that made it possible, blockchain, could potentially be transformational. And what Bitcoin tried to do basically was something relatively simple, which is to create cash for the internet, a way to move value peer-to-peer without an intermediary, like a bank or PayPal, Visa, or so forth. And that had never really existed before. The internet has transformed lots of industries, but it's fundamentally an information medium. So when you send something online, you're not sending an original, unique thing. You're sending a version or a copy, right? So it's good. That's fine when you're doing Instagram Lives. Everyone can watch it. Or if I send you an email, I can send the same one to Richard, your boss. But it's bad if it's money, right? If I owe you money and I can send the same money to Richard, then that money becomes worthless. So it was on this journey that I began to think, well, if blockchain can make digital cash possible, could it make other kinds of digital assets possible as well? And, the industry that I was working in was in the securities industry. So I started to think about, the big securities categories, right? Stocks, bonds, and so forth. Suffice it to say that I got hooked and quit my job, working on the institutional desk at Canaccord Genuity to write a book with my dad, Don Tapscott, called Blockchain Revolution. And that was really what set us on our path here. The book is, turned out to be quite impactful, and for that we're really grateful. And it's allowed us to do some other cool things, including launching the Blockchain Research Institute. So you mentioned that the Blockchain Research Institute is the largest independent blockchain think tank in the world. So we count as our members dozens of big Fortune 500 companies and governments. So, Exxon, FedEx, Tencent, IBM, Microsoft, Pepsi, Coca-Cola, Procter & Gamble, Loblaws, Manulife, CIBC, TMX Group, CSE, etc., are all members of the BRI, and we do research into blockchain use cases and challenges. What I've been up to recently is I just released a new book, Financial Services Revolution, which is made up of some of the best research that we've done at the BRI looking into finance, with a new first chapter that I wrote especially for that book. And more recently, we've been, not because of the virus, but the virus has helped to highlight it, really been beefing up our virtual and digital offering as an organization, and have been really leaning into trying to figure out what kind of problems within the whole coronavirus pandemic blockchain could solve. It obviously can't solve lots of things. It's not a panacea, but there's some areas that we've been exploring with the help of a number of big experts in the space that we think could be quite impactful. So on the basis of that, we released a big new report, and we're doing a whole webinar series as a result. The next one is scheduled on Tuesday with Christopher Giancarlo, who's the former chairman of the Commodity Futures Trading Commission, which is the biggest securities regulator in the world. So that will be very, very interesting.
Okay,
so that's what I'm up to.
No, you segued into a lot of our prep questions, which is beautiful. So let's go back to the book. So
yeah,
well, the second one. So for the viewers, you can go back to our interview a year ago on hashtag finance, the podcast. We talk a lot about the first book that you wrote with Don.
Yeah.
Now the second book, Financial Services Revolution, which you picked almost the best time ever to launch a book. Not that you could have predicted what was happening, but I guess you're in the mid-promotional cycle of this launch, and everything starts happening. Can you just kind of walk through what has been happening since you tried to launch this book and how you've been getting the word out about this publication?
Really interesting question. that I can answer in two ways. So, boots on the ground, trying to market and publicize the book. Yeah, it was highly disrupted. And, in terms of things that have gone wrong, this is a tiny, minuscule, insignificant thing in the context of everything else. But we were in the midst of a book tour across North America. We did events. We were able, fortunately, to complete the event in Toronto and in Montreal, but had to shelf the event in New York and Washington, D.C., which were scheduled for March because of the coronavirus. And so, that on that one hand, it's been disrupted. On the other hand, some of the ideas that we discuss in the book have become, all of a sudden, have become a lot more relevant to the current crisis. And, they say that crises, excuse me, act as an accelerant of a lot of things. Some people say that it puts history into fast forward. So, bill laws that would have taken months or years to clear Congress, or in Canada to clear the legislature, happen in a matter of weeks. Big trends in terms of how we shop and where we work, which have been happening over the past 20 years, all of a sudden get put into overdrive. So everyone's forced to work from home. So Zoom, sees its number of users increase tenfold, or Amazon all of a sudden basically becomes the entire retail sector of the economy overnight, right? And Shopify to a lesser extent. And so the same thing, that same accelerant, is also happening in certain areas of financial services. The biggest one that we've seen is around money itself. So what we've seen as a result of this crisis are a lot of people saying, cash, physical dollars that you hold in your hand, are actually spreading this virus. When you're going to a shop and you're handing the merchant $20, you've touched it, he's touched it, who else knows who's touched it as it's traveled through the economy. Therefore, the solution is to abolish cash. Well, that's something that's actually more radical than it sounds. On the one hand, we have seen digital payments like, Visa, Direct Debit, Apple Pay, and so forth becoming a lot more popular. And so the drumbeat to abolish cash has grown louder. But so far, we still don't have the perfect thing to actually replace cash itself. So cash is more than just a medium of exchange. It's a way to pay for things in a private way, in an anonymous way. If I go to the store and pay with cash, the merchant doesn't ask me for my driver's license, right? All he knows is that the money has got value, it's worth something, and so he's willing to accept it. So if we remove the ability to spend money privately, then we remove a crucial freedom from the economy, and that's a very dangerous thing. So there are, fortunately, a whole bunch of new kinds of money that have been underway, sort of been worked on prior to COVID, which are obviously being kicked into high gear. And those are grassroots, sort of organic-based currencies, not organic in terms of dirt, but in terms of self-organized from communities like Bitcoin, corporate currencies like Libra, which is Facebook's initiative, and what are called CBDCs, or central bank digital currencies. And each of these different kinds of money have different properties. None of them is perfect so far. Bitcoin allows for anonymous transactions, but it's clunky to use. It's not necessarily intuitive, and it's volatile. So as a medium of exchange, it lacks certain functionality. Corporate currencies may be useful for the billions of people who have access to a Facebook account. However, they're ultimately governed by the companies who created them. And so there's very little privacy. You have as much privacy as you do as a user of Facebook, which we know is very little. And then central bank digital currencies, I think, are the area that offers the most promise. But even then, there's some design flaws there. So in China, for example, they're moving faster than anyone to release a central bank digital currency. And the reason for that is not only to make the economy more efficient and to make the central bank more responsive to crises, which are some of the benefits, but it's also obviously to increase control, surveillance, and to know more about how money is being spent in the economy for political ends. Excuse me. So in countries like Canada and the US, we need to think about if cash is going the way of the dodo, and if corporations are going to be playing a more active role in the exchange of value, more so than they have in the past, then governments and central banks need to be very thoughtful about how they design currencies of the future. The Bank of Canada, excuse me, has said that it would launch a central bank digital currency if its hand was forced, meaning if companies or other central banks did it. I think that's the wrong approach. I think they should be proactive. And I think from basic design principles, yes, it should be efficient. Yes, it should be digital and seamless, but it should also have some anonymity and some privacy, and I think that's important.
Makes you wonder what the potential is. You mentioned Amazon, and we also talked about Facebook. Why wouldn't they have their own currency? Why would they not just own that vertical of transaction, the transaction pipeline, and just completely own the customer? I mean, maybe let's talk about Facebook for a second and about what they're trying to do with their currency.
So the original, well, I'll answer it.
Yeah.
The original design for Libra was something quite ambitious, honestly.
Yeah.
It was basically supposed to be a stable coin, which is a digital asset, which is pegged to the value of some more recognizable asset. Most stable coins are US dollar stable coins. What Libra wanted to do was to create a currency based on a basket of currencies. So this thing was supposed to be mostly US dollars, but also euros and yen and Swiss francs, and I think Singapore. The Singapore dollar was the last part of the basket. And this caused a lot of consternation in government, especially in the US, because the US dollar is the global reserve currency, and now this company was going to try and create something that wasn't entirely the US dollar and was maybe going to become a settlement layer for all sorts of international payments. Like, they didn't want anything to do with that. And so Facebook's been forced to redesign everything to more of a closed system based on specific currencies like the US dollar or like the euro versus this, more ambitious basket idea. But even still, the potential for something like Libra is pretty significant. Based on our research, we've identified, a number of countries in the world where more people have access to a Facebook account than who have access to a bank account, right? Yeah. And not only that, in a lot of those countries, the local currency could potentially be something that's sort of unreliable and not particularly useful, right? It could suffer from hyperinflation. The government might be in bad shape. There could be a corrupt dictator in charge. I mean, God, that's, and it could be worse. I mean, there are worse scenarios than that. So all of a sudden, if you've got a way to store value, right, digitally, move value, and access potentially even credit, right? The ability to get access to loans. Those are the three sort of basic building blocks of banking. And so, it's possible that many people in a lot of those countries are able to leapfrog traditional banking infrastructure and even traditional currencies altogether and go straight to digital currencies. So that, I think, could have a potentially destabilizing impact on a lot of those different governments.
It's a good strategy for growth markets, for sure. I would gather that trying to launch this currency in the US would have a lot of headwinds for Mark Zuckerberg.
Say it again.
I imagine there'd be a lot of headwinds for Mark Zuckerberg to get adoption of a currency, a recognition of a currency in the United States, transactable currency.
Huge
headwinds. Yeah.
They've been pounding their head against the wall for a year. Like in the US, a couple of different committees in Congress sent letters to certain members of Libra, including including Visa and MasterCard, basically saying, if you do this, you could run afoul of some pretty serious laws. And as a result, those two companies backed out. Now, there's still tons of companies, including Shopify here in Canada, that are still involved, and there are thousands more that want to be involved. So I think there's no risk that a lack of commercial or customer interest is going to kill Libra. It's more the regulatory headwinds, right, as you identified. And I think that Facebook is extremely committed to this. If they wanted to back down from it, they would have 6 months ago, when the proverbial crap was hitting the fan. And they're clearly trying to see it through, and I think they'll be successful. And honestly, even if they're not, the cat is out of the bag, the genie's out of the bottle. It's very likely that other big companies who have got massive installed bases of customers and deal with billions of dollars of transactions, or trying to muscle into that market like Facebook was, will see the obvious benefit of doing this themselves.
Interesting. So just for the viewers, and I'm just picking up a little back audio blast whenever I talk, so I hope you're not hearing that out there, but if you are, I'll try not to talk too much. We're going to have questions for Alex available in the little box down below. There's a little question box, so you can go in there, you can ask a question. I'll get that to Alex by the end of the show. So let's talk about back to COVID and what's happening in today's world. So blockchain is a solution. There's a couple of themes you touched on, which I really want to talk about. One is freedoms, and we've seen a lot of press around encroachment on people's freedoms as a result of how the government needs to handle the economy and withholding people from going back into the economy. Now let's just talk about how freedom can interact with blockchain, how blockchain is going to help create solutions where we can continue to go back into the world and potentially reintegrate while we still figure out COVID. And it's a bit of a clumsy way of asking. Is blockchain going to be able to help us get through this thing? Is it going to help us reintegrate our society? Is it going to help defer or what's the word I'm looking for? Like the pain of giving up your civil liberties in the government. Is there some way that's all coming together?
Yeah.
That we need to address? Sorry, very clumsy asked question, but I want to try to get your feelings on this.
Well, blockchain is not nearly the most important thing in this crisis to solve it, right? Like, I think what this crisis has demonstrated is we need to trust science. We need to all do our part, and we need to have functioning institutions and governments. Kind of those are the table stakes to having a half decent response to this crisis. And unfortunately, in a lot of countries, we've fallen short of what I think are some fairly basic requirements. But I do think that blockchain has the potential to address the current crisis, but also, I think, as you said, sort of plan for the future. So one of the things that has come up is this sort of this push and pull between civil liberty and between collective safety or collective security. And this kind of comes up time and time again throughout history. It's not unique to this crisis. And the argument is basically, well, hand over all your personal data and everything about you to the government, where you go, what you eat, who you've been in contact with, where you live, et cetera, and we'll be able to track the virus better. And so the trade-off is, okay, well, now I'm giving up some privacy, and in exchange, maybe the health outcomes for the population will be better, right? And I think that has been sort of a true trade-off until now, but I think blockchain offers an alternative, which is basically that in the same way that we can enable anonymous or semi-anonymous transactions in terms of financial assets, we can do the same thing for our identities. Our identities and the information about us can be protected and secured in a similar way as value is secured on a blockchain, right? And so individuals can own their own patient records, for example, or own their own location data, or own their own habits, where they've eaten at, or what they visited. And they can put that information in an anonymous way into basically like a data commons, so a way to share all that information without identifying the actual individuals who are involved. And so that's a way for us to preserve our privacy and to take control of our information, while also contributing to a more robust response to the virus. So that's one example. We actually, as I mentioned, we hosted this big roundtable discussion where we brought together 40 experts, people from technology, from public policy, people within government, people from the enterprise world who are involved in this, like on the supply chain and logistics side, to try and figure out what are the areas that we can help to affect. So the first one was what I just described, identity and patient records. The second area was in supply chains. So supply chains, a bit of a misnomer, because really what we care about not in the supply chain is not so much the state of a supplier, it's the state of the asset itself, right? Like where are the goods as they travel through the economy? When will they arrive? Are they legitimate? Are they what we think they are? Where did they come from? And so forth. And so what blockchain enables is the ability to basically take a real-time snapshot of the state of a network, right? In the case of Bitcoin, it's when will the block be mined, who owns what Bitcoin, and so forth. In the state of the supply chain, it's where are assets in the supply chain, have they reached certain checkpoints, what's their provenance, and so forth. By doing that, we can have more responsive and more resilient supply chains. One of the examples that people have talked about is toilet paper, right? And for whatever reason, everyone thinks we're all going to run out of toilet paper, and so they've been hoarding it. Now, I think some of that's based on some irrational human emotion, but maybe if we're able to show everyone that the supply chain is just fine and that there's plenty of toilet paper to go around, and they could all trust that information was true, then we wouldn't have that kind of mania. A third area is in the area we discussed earlier, which is around money. right? So if we're going to abolish cash, then we need to have a digital alternative, and that could be helpful because it would mean less, person-to-person contact, but it would also mean we don't have to make that trade-off where we lose privacy in order to protect everyone as a whole. And then the fourth area was, again, sort of tying into identity. Could we have more responsive ways of onboarding medical personnel to address certain problems, right? So there are a lot of hospitals short on staff. There's actually an excess of medical talent in the world, but it's figuring out how to get the accreditation from one country to match with another system, or how to get one person in one hospital onboarded into another. That can be a friction point. So if you have a digital identity that contains all that information in a trusted way, you should be able to do that quicker. So a lot of that is how do we deal with this current situation? I think the supply chain side is probably the most relevant to today's crisis, but a lot of this should be put in place so that we can react better in the future.
Are you seeing anything happen in real time then with the blockchain trying to solve these issues, or is this going to be down the road when we have a bit more perspective and time to create the technology to prevent these issues from happening again?
Well, I think some of it is already in place, but I do think that you have to hit the wave, and if you're 2 seconds too early or 2 seconds too late, then you don't actually hit the wave. And I think in this case, this crisis happened a bit too early. I obviously wish it hadn't happened at all for the clear public health reasons and the economic reasons. But I do think that blockchain, these solutions that I'm talking about, aren't quite ready for prime time, and probably would be if this had happened a year later. So I think most of the innovation that I'm discussing is something that we should use in future crises. But I do think some areas today, like I said, technology is an accelerant. It moves human history forward faster. It moves technology faster. And so I think now would be a good time to quite counterintuitively to actually experiment and implement some of these new systems, because clearly what we have today is failing.
Yeah, and you think it's going to be corporations that are going to push the envelope on this stuff? You mentioned supplies. 3M, to me, would be a company where they probably want to have more traceability, I would suspect, of their products and where it's going. We have a lot of debate about who they were supposed to send masks to, for example.
Yeah.
And having that visibility would definitely increase the trust that people can have around how their product is moving around the globe, and make it more efficient, to be honest.
Yeah, well, look, again, blockchain is not a panacea, but you can imagine a scenario where 3M supplies that were manufactured in China, destined for Germany, and all of a sudden get rerouted to Thailand and to the United States. It's a week later that we find out about that because of some good sleuthing, but it could have happened a lot earlier if we'd all had better information, and maybe that would have stopped a little bit of the strong-arming, gamesmanship that we're seeing between governments. It's possible. It's a counterfactual. I can't say for sure that it would have turned out differently, but you can see the ways in which it potentially could.
So do you think more of the talent that's been in the blockchain space is going to move into these corporate solutions and further away from what the traditional mind hive has been around? Currency. You mentioned currency. A lot of people know the Blockchain and Currency Association, but are you going to see more people come to the Institute wanting to work with you on these solutions, having taken their experience in currency and probably saying, you know what, there's actually other ways we can use this technology to better the world and create good business?
Well, the members of the BRI are reflective of the economy as a whole. There's probably, we over-index maybe a bit to technology and to financial services, which is natural, you might expect, given this is a new technology, and because it's an asset medium, a way to move value around, that it's obviously got a lot of use cases in finance, which we've discussed. But we have consumer packaged goods companies, we have logistics companies, we have energy companies, we have transportation companies, all as members, and they all see the technology having an impact in one form or another. Where is the innovation going to occur? It's not all going to be based in Silicon Valley, that's for sure. With the first era of the internet, most of the internet connections were in the United States. The venture capital industry was in the United States. Most PCs and most people connected to the internet were in the United States. So the Silicon Valley kind of dominated the first era of the internet. Today, technology is way more distributed. Everyone in the world has access to the internet. Not every person, but every country does. And there are plenty of places where there's lots of interesting innovation happening. And then I also don't think it's all going to happen within the technology industry or within the startup space. We're seeing I think that big companies today, having seen, with the benefit of hindsight of having seen certain industries get wiped out or companies disrupted, like say Blockbuster, are a little less cocky about how technology could change their business, and so they're doing real stuff. And then the last thing, which is wholly unexpected here, is governments themselves. On one hand, securities regulators have been really slow to change the rules to accommodate new asset classes. On the other hand, we've seen central banks, which are some of the most staid and, sort of seemingly permanent institutions, moving forward and doing all sorts of crazy stuff like digitizing money, which is quite interesting. So it's happening all over the place, is sort of the point.
Yeah, and so Anna Saren's got a question. She wants to know about the applicability of blockchain in the public markets. So do you see, from our perspective of the Canadian Securities Exchange, we're firm believers in tokenization and evolving how securities are cleared and settled using blockchain. Do you see, from your own experience in capital markets, but also from your vantage point now, if there's any clear indication that blockchain will impact or revolutionize things that we're doing in our world, in the public market space?
Yeah. So the reason that blockchain is a good idea for securities is to reduce settlement times, to reduce friction, and to improve trust in the system, right? So instead of transactions settling T+3 and involving broker-dealers and clearinghouses and custodians and transfer agents and so forth, they could settle T+0 and be final between buyer and seller. And that's one benefit. The other benefit is that digital securities enable entrepreneurs anywhere in the world to basically stand up a business. If they have a good business, they want to raise capital, they can raise it in a decentralized way in small increments from investors all around the world. And so that is an opportunity to inject cash into startups and small businesses, which is extremely important given in the current situation, because the data says that small and medium-sized businesses create most new jobs in the economy. And number two is that a lot of small businesses are going to get wiped out, unfortunately, because of the coronavirus. And so we need to create tools and make it easy for entrepreneurs to start companies. And I think securities tokens are an easy way to do that. The flip side is that you need to have a buy side in order to make a market, right? So unless the issuer is a quality business that people are interested in buying, the underlying technology that's used to create the security is not as relevant. If you've got a funny little business and you do a security token offering, that's no guarantee that investors will want to participate. So what we need to see is a couple things. We need to see on the issuer side more quality issuers that see this as an opportunity, a more creative way to raise capital, and to raise it maybe in larger increments or better prices. And we need to see regulators create the conditions that make it easier for this to happen. So if you're a small technology company and you want to do a security token offering, if the regulatory burden in terms of the cost of legal and filings and so forth is as high or higher than just doing a regular private placement, then why on earth would you do the token offering? The whole point is to reduce friction, not add friction. So there's a limit there, that there's a implementation challenge there that needs to be overcome. But it should be overcome because, as I said, the upside is significant. The ability to reduce friction and cost, to expand ownership of capital assets, which is really the way people make money. They don't make money earning wages. And also to make it easier for entrepreneurs and issuers to raise capital to start businesses. These are the benefits that we need to open up the door to enable.
Yeah, those are all great points, and I echo what you said about earlier startups and how what they fundamentally do has to be of interest to the world and not just wrapped in the, for lack of a better term, gimmick of a different type of financing tool. It has to be something that makes getting the money into the useful business easier for everyone and lower cost. Someone keeps asking about someone trying to hack Bitcoins. I don't know if you have any concept of what was written about in the Toronto Star, but I guess the broader question is, how do you protect yourself from people trying to infiltrate your accounts? Is there any thoughts on, I guess over time, has Bitcoin as a currency been easier to protect, easier to withhold? Obviously, there's a lot of controversies in the early days of Bitcoin around exchanges being hacked and things like that. Any thoughts on how that's evolved from a safety and security perspective?
Well, like anything, like any asset, Bitcoin can be stolen. Bitcoin itself can't be, when you see hacking, it's not the underlying technology that's being hacked, right? It's not Bitcoin. The Bitcoin that's hacked is not worth less because someone's exposed a flaw in it. What's happened is that someone's basically, broken into a safety deposit box or bank. I'm using that metaphorically because that's basically what, an online exchange wallet is. So yeah, I mean, if we're talking, custodying your own crypto, the recommendation I have is that any amount larger than what you'd be willing to carry around in your wallet. So if that's $100, if it's anything more than 100, should be stored in what's called cold storage, right? Not online, not connected to the internet. And I think that's an area that is interesting for a lot of people. But again, like, I'm not sure everyone is going to be comfortable being their own bank and owning the equivalent of lots of money themselves, and that's not in a bank account that's not insured by CDIC and so forth. And these are some of the technical and regulatory limitations of Bitcoin. So that's why I think Bitcoin is the start. It's not the end of the sort of blockchain revolution. And all of these areas, central bank digital currencies, corporate coins, securities tokens, and so forth, are areas of growth that could ultimately be could be larger and more impactful than Bitcoin because they marry utility with a market, right? Product market fit. And I think that's where we'll be seeing a lot of innovation.
Okay. Now, I'll wrap on this point, or at least I'll lead us to the wrap, which is you wrote the book, the second book, or the forward to the second book, or the first chapter.
Yeah.
And you collaborated with everyone on it. Why did you decide to write a book? Why do you like writing books?
I like writing books for a couple of reasons. The main one is that, I learn myself by speaking to experts, people who are smarter and more knowledgeable than I am, and by putting pen to paper. That's how I really ultimately understand a concept. And so, for example, for the book, Financial Services Revolution, I only wrote the first chapter, right? The rest is research. But just for that first chapter, I think I interviewed 24 people. People who run some of the biggest businesses in the space, people who are highly critical of this technology, people who are pro Libra, anti Libra, so on and so forth. And it's in doing that I'm forced to challenge my own assumptions to, go deeper than just sort of surface level and to really understand a concept. And that makes me more effective as a public speaker. It makes me more effective in my role at the Blockchain Research Institute. Makes me a more effective investor and advisor in companies. I've done a lot of investing in the space quite successfully on behalf of others and for myself. And without the ability to understand the concept, I could find myself out of my depth pretty quickly in those areas. So that's the way I learn. And, if it means that I can also share with people things they may not have thought about, if it opens their eyes to the possibility of this technology, if it makes them, rethink their assumptions, then I think that's a win as well.
Well, and where would you direct people to get more Alex Tapscott, get into your brain, get into the content that you guys are producing at the RI? Like, where do you want people to go first?
Well, there's a few different things. So first and foremost, you can follow me on Twitter. You can follow me on LinkedIn. I write for the National Post fairly regularly, so you can see my columns there. I've done some writing for a bunch of publications, New York Times, Harvard Business Review, and others. So, anywhere people want to check out my writing, there's a lot that's available in the public domain. And then on YouTube too, there's a 20 or so videos. If you're interested in learning more, you can check them out there.